we could be anywhere.
Ladies and gentlemen, a very good morning to you and welcome to Barcelona. As the chairman of the European Covered Bond Council, it is my pleasure to welcome you all here to the 22nd edition of the ECBC Plenary meeting. The plenary meeting is the key discussion forum for the covered bond industry, where we discuss about the current market state of play, regulatory pressure, market dynamics, and the directions to be taken next. The ECBC indeed plays a lighthouse role in this market, guiding the industry in uncharted waters. Today we need the input of all of you, so please don't hesitate to raise questions, comments during the panel debates later on. Only an active participation to these debates from a broad spectrum of market stakeholders, that's you, will ensure market consensus and the industry's capabilities to move forward. Besides all of the ECBC's members present, I would especially like to welcome those of you attending as our guests and those of you who represent national authorities from the covered bond jurisdictions around the world. I would also like to take this opportunity to thank our sponsors, Banco Santander, BBVA, and CaixaBank for their support of today's event, with CaixaBank also being our hosts here in the wonderful Cosmo Caixa building. I trust that today's discussions will be enlightening and stimulating and help all of us rise to the challenges that the covered bond sector will face in the coming weeks and months. However, before we begin to look forward, allow me to reflect for a moment on where we stand now and where we have come from. Looking back over the last year, it is clear that the covered bond space has been fundamentally impacted by major waves of monetary policy, supervisory review, and regulatory changes. These developments and the new perspectives that they bring with them are reshaping market dynamics as well as the environment in which this asset class operates. In this context, the ECBC is now playing more than ever the role of market catalyst and think tank, which is in turn allowing the market to converge and coordinate by speaking with one voice. Moreover, the role played by the ECBC in this new context ensures the smooth functioning of the market itself by identifying and implementing common qualitative standards and quantitative parameters. Looking ahead, the ECBC accepts the responsibility to continue to act as the industry discussion forum and market lighthouse, developing a clear vision of the challenges and opportunities on the horizon amongst market participants. Since the beginning of the financial crisis, around 30 pieces of financial regulation have been approved by the European institutions, all aimed at strengthening the financial sector and rendering it more resilient to shocks. Amongst the most notable legislative proposals are, of course, the Basel III framework for capital requirements, the BRRD, the banking union, and the revamping of European capital market structure. In particular, the implementation of CRR and CRD4 packages in the EU is the backbone of the EU single rulebook for banks, which aims at providing a single set of harmonized prudential rules that all financial institutions throughout the EU must comply with, and that's 8,300 banks, thus helping completing the single market in financial services. The overall financial strength of the European economy is strongly correlated to banks' ability to lend to both the private and public sectors. This capacity has been impinged as a result of new global rules that require banks to increase their capital ratios. The implementation of the Basel rules, together with the proper treatment of covered bonds and high-quality securitization, raises questions about how a level playing field can be ensured at the global level, especially for economies strongly reliant upon these funding instruments, such as in Europe. More importantly, as has been clearly indicated by their recognition in the ECB's covered bond purchase program, covered bonds play a pivotal role in the creation and development of a capital markets union as key long-term financing tools and as a mean for a common monetary policy to be effectively transmitted to the real economy. This strong macroprudential recognition was further confirmed by the publication of LCR, Delegated Act by the European Commission, in which covered bonds have been categorized as extremely high liquid assets. The ECBC welcomes the Commission's recognition of the macroprudential value of covered bonds. Indeed, the inclusion of covered bonds in level 1 will facilitate the aim of delinking the sovereign from the banking sector. Covered bonds represent a key funding tool for the future European banking industry. They are an effective way of channeling long-term financing for high-quality assets at a reasonable cost. They improve banks' ability to borrow and lend over long-term horizons, and therefore represents a stable source of funding for key banking functions such as housing loans and public infrastructure. It is no secret that long-term financing is crucial for housing finance. Building on purchasing a home is the most significant investment for the majority of European citizens, representing typically 4 to 5 times their annual income. In the absence of pre-existing wealth, people would have to wait 40 or 50 years if they had to rely solely on their individual savings. Borrowing resources are therefore necessary to acquire a home and more generally to support the European economy. Given the size of the investment, their repayment must be spread out over a long period to be compatible with their annual savings capacity. Long-term funding tools for banks are therefore required to avoid asset and liability mismatches. The efficient availability of mortgage finance is also based on the ready availability of financing at the longest tenors possible and the lowest price feasible. Without this, the mortgage market would be a function of market sentiment, and the refinancing rates available to borrowers would be subject to much more pricing volatility, making planning for private households more challenging. In this context, and in particular in times of low risk appetite from investors, covered bonds play an essential role in ensuring the flow of capital in financing long-term growth and the real economy. Covered bonds offer key safety features such as strict legal and supervisory framework, asset segregation, and a cover pool actively managed in order to maintain the quality of the collateral. During the recent financial turmoil, the existence of a well-functioning covered bond market has allowed governments in Europe to constantly channel private sector funds to housing markets and maintain a relatively efficient lending activity without increasing the burden for taxpayers and public debt. The growth agenda debate has also dominated economic and political discussions beyond the EU, raising the key questions of how to finance economic growth and how to create an efficient and robust long-term financing toolkit. This debate has a very high political profile as it engages key stakeholders at both an international and at a national level. Furthermore, this raises fundamental questions regarding the fine-tuning of the Basel III parameters and the right calibration between enhanced risk assessments, reduction of systemic risks, and continued lending capabilities of the banking sector. The strategic importance of covered bonds as a long-term funding tool is now recognized at a global level. Major jurisdictions including Australia, Brazil, Chile, India, Japan, Mexico, Morocco, New Zealand, Panama, Peru, and the United States are either in the process of adopting covered bond legislation or are investigating the introduction of covered bonds. This year's ECBC Fact Book provides comprehensive coverage of these new legislative frameworks and developments, and shows how the ECBC is further strengthening its role as the principal voice of covered bonds, not just in Europe, but globally. The industry continues to build on the lessons learned from the financial crisis, while maintaining a focus on the essential features and qualities that have made the asset class such a success story. The ECBC firmly believes that the quality of the asset class will continue to be the basis of our strengths in the future. The success of covered bonds also lies in the industry's capacity to respond to the challenges of the current crisis and its ability to share market best practices. This allows a continuous fine-tuning of European covered bond legislation and facilitates a strong level of transparency for the assets class. Furthermore, the on-balance sheet nature of covered bonds is an efficient and simple alternative to complex originate-to-distribute products, ensuring financial stability. The commitment to contribute to European efforts to enhance financial stability and transparency has led the covered bond industry to launch a quality label. The covered bond label was developed by the European issuer community, working in close cooperation with investors and regulators, and in consultation also with all major stakeholders such as the European Commission and the European Central Bank. The label is based on the Covered Bond Label Convention, which defines the core characteristics required for a covered bond program to qualify for the label. The Covered Bond Label and its transparency platform have been operational since January 13, providing detailed covered bond market data, comparable cover pool information, and also legislative details on the various national legal frameworks designed to protect bondholders. As of August 15, 86 labels were granted to 74 issuers from 14 countries, covering over 1.4 trillion euros of covered bonds outstanding. In this context, covered bond issuers from these 14 different jurisdictions have come together to develop a harmonized transparency template, and we finally agreed on that yesterday in the Label Committee. From 2016 onwards, with a one-year phase-in period, this will provide cover pool information in a harmonized format, which allows for both the recognition of national specificities with the national transparency tabs and the comparability of information required to facilitate investors' due diligence. In conclusion, the ECBC believes that the quality of the covered bond asset class will be the basis of our strength also in the future. The industry has demonstrated that through market initiatives such as the label and the recently proposed European secured note, it is possible to build from the bottom-up proposals based on market consensus in order to initiate pan-European solution which enhance transparency, comparability, and convergence of markets and best practices. More work needs to be done, but we believe that the initiatives underway will strengthen the asset class even further and facilitate the convergence of market and supervisory best practice. The increased recognition by policymakers and regulators of the central role that that the asset class plays for the banking system and also for wider financial stability reinforces the need for an appropriate regulatory framework for covered bonds at both European and international level. This will be our objective in ECBC for the coming years. Thank you. And now I'm indeed very honored to welcome our first keynote speaker, State Secretary for Economic Affairs, Mr. Inigo Fernandez de Mesa Vargas. Sorry if I didn't get the name right. Inigo Vargas is an economist and has extensive experience from executive positions in the private sector, just as he has held different high-level positions in the World Bank and in government service in Spain. Welcome.